It was a great presentation. I'm going to try to do kind of three things. I'm going to riff off Jeff's comments. I'm going to tell you what we're seeing kind of at a macro and micro level. I'm going to feather in a little bit kind of progress partners and what makes us different. I think all you being here today is part of that, but it really is kind of a special place. Let me just start with that for a sec. When I joined, my name is Chris Legg. I'm a senior managing director and partner. And when I joined Nick, who you saw earlier on, and Sam, who you're going to see shortly, 6 years ago, they said to me, "Hey, we really want to build something kind of different and transformational." And I think that we have a different approach to how we do things. I came with my own sort of brands in terms of having worked at large banks and coming with an MBA. But essentially, our approach and our network and our knowledge, we do things quite differently. And you guys are all part of that. You guys in this room are the doers, the dreamers, and the characters. And over the last year, since Progress Connect 2018, we've had a number of interesting deals. The Delta Trade's acquisition of OTT software company Massive, TransUnion's purchase of database marketing company TrueSignal and Deloitte, and Vise, we helped sell, which is a financial tech platform to MasterCard. Later on this afternoon, you're going to be seeing a robotics, and we actually spent a little bit of time in robotics this year working with Boston Dynamics and Kinema. So another, I think, part of this would be a good discussion is there a part two? So let me sort of go back and riff off of Jeff's comments and layer into sort of what we're seeing in the deal environment. Okay, so here is deals, M&A deals by quarter, by both volume and dollar size. And so a couple of takeaways from this. Number one, and Jeff said it well, despite all the theater we're seeing when we turn our TV, the markets for liquidity have actually been remarkably stable. And there's a slide that I've seen that shows GDP growth over the last 10 years. And what you see is, again, a lot of volatility in the world and politics, but GDP growth actually has been incredibly stable. It's about 2% for the last 10 years. And really, the M&A market has been stable. We did these numbers about a week ago, but Q3 has already come in. That's up from Q2. And I will tell you that Q4 is already looking quite strong. It's, of course, we're only 3 days in, but there's a lot of stuff happening. We're actually announcing a deal later tonight, and we're seeing good activity. It may be the late innings. By the way, I remind you, for all you sports fans, that not all games go 9 innings. And certainly we're at the long part of a cycle. But this cycle still got legs to it. And I think that's kind of one of the big themes here. Certainly the IPO market, which back in my early days of banking was a substitute for the M&A market, has kind of gone in and out of being a substitute. But we're seeing some real indigestion, especially at the high end of the market with the unicorns, where I'd say essentially what's happened there is the private market on the unicorns has overpriced some of these deals. And so you're seeing massive indigestion from some of the unicorns trading below their IPO price, or some of the other ones that's being pulled, like we saw with WeWork. But I will remind you, again, and a lot of the theme is going to be like, how much longer does this last? The Fed is a good backstop to all this and is our friend in all of this. So here's another one in terms of deal flow and activity in kind of both media marketing and technology, but also broadly in software. A couple of kind of themes here. First of all, in ad tech, it continues to be robust. I will say the CCPA coming in 2020 is a bit of a cloud in that sector and more broadly. I would also say another sort of high-level point is that PEs, firms remain active in this market and have, I'll go to a slide a little later on in terms of like PE strategics, who's more aggressive, but I continue to see them be a big part of this market. And then the other thing, again, going back to the analogy of what inning we're in, on media in particular, it's really exciting in terms of the new content streaming being announced by Apple and Disney and Comcast. And that's really, it's going to be a huge battle and war. It's going to lead to a lot of new players and technology and service. And it's interesting to see Netflix under being intact, and we really think that there's a lot of opportunity for huge disruption in that market. Okay, I like this page for a couple of reasons. This goes over the last sort of 8 years, and this is back to that question we often get asked, which is strategics, financials, who pays more? And this would tell you that on the face of it, strategics pay more. They pay about a multiple higher. They're the gray guys, and the financials are the blue guys. And that's not entirely true, because I think that what's also happening in this is that the strategics are looking at deals and they're paying more for growthy companies, whereas don't forget financials at the end of the day are paid and their returns are based on cash flows. And so they tend to go into more mature companies which have higher cash flow, and those mature companies generally garner lower valuations. So strategics have paid higher in the past, but I'd say what we're seeing in the market today is about equally between strategics and financials. As I said before, the financials are playing an increasingly aggressive part in the market. This is not so much one about kind of what's happening with valuation, but really sort of what's happening with different business models and how they get valued. The top one is around revenue, and the bottom one is around EBITDA. And so sort of a couple takeaways here. One is, I've said many times, real stability around valuations. This is Q2 last year compared to Q2 this year. And then you also see a pretty good variance in valuations depending on your business model. If you're software recurring, that's the guys on the left. Transactional is more the ones in the middle. And then more kind of ad-driven is on the right. And you see, from an EBITDA perspective, those multiples kind of go from 20 down to 10. But from a revenue perspective, you see a real variance in multiples from kind of 10 almost down to 1. And that's not only the business models, but also their margins and their growth of those kind of companies. Back from economics and Jeff's comments, the stock market is still a leading indicator, not a lagging indicator. The stock market, as Jeff said very well, would tell you that we're reasonably well the last few days notwithstanding. And as a reminder, the VIX index in the bottom right, which has spiked up in previous recessions up into the sort of 40s and 60s and 70s level, is still only at 20 today. It has remained fairly low. And so from a stock market, equity, capital markets, the IPO market notwithstanding, it does feel like the window is still wide open. We're seeing a fair amount of deal activity. As I said, we're quite bullish about Q4 and Q1, and certainly dovetailing off Jeff's comments, well into at least the middle of next year. I did want to say a couple other comments, just coming back to kind of us and progress. We've all been kind of about the deal business, and I think some of you were here yesterday for the venture piece. And we've invested in 20 companies. We've had an ROI of 3.42, and if you haven't met them, you should meet Adrian Zermulin and James Hamilton, who are two of our full-time professionals now on the venture side. We had some really good exits in the last year. We had Simplify at 11x, Integral Ad Science at 24x, and Massive at a 3x. We also have a really great, robust executive in residence program, and that's, I think, been a part that we've really grown over the last few years. Our EIRs have gone on to be senior management at Amobi, at Centro, at the Weather Company. And when I talk about what's unique about us, I think that senior leadership and talent and knowledge has definitely been a key part of that. And then just finally, kind of another piece on us, we moved our New York office to the Chrysler Building. As you're getting a sense, we like iconic places here at Gillette Stadium. And we recently updated our website. So you'll see a lot of kind of changes in how we look and feel in the market. But I really want to thank all of the Progress staff who've kind of helped put this together, but especially Rachel. I'm not sure she's around. You really did a great job in pulling this whole event. Thank you very much.